So in this video, I'm going to be reviewing my strategy and basically what I look for when I'm coming into the market. Gonna make it as basic as possible. Um, Very beginner friendly. So um, I'm gonna reviewing the first all the way from the third of November, all the way until today. So my key my key ways to find out where the market is moving. Um, First, you need to find out and understand that during market open, the market will show what direction it will be moving for the first 30 minutes. So when I'm trading, I only trade for 30 minutes a day, from 9:30 to 10 o'clock. That's basically what I focus on. Those first 30 minutes on the 5 minute time frame. Um, so when I do look for the direction, you want to wait for manipulation to expose itself. Usually, it's the first 5 minutes of the market. Um, it'll go one direction, and it'll either reverse or continue to go that direction. So after the first 5 minutes is really when I start looking for an entry. It just all depends on before on pre-market. I'll go to the 4 hour and I basically just look for what is the overall trend. Um, See here, when I was going through here on the 3rd of November, I was mainly looking for shorts. As you can see, I was looking for that respect on the Bollinger Bands. I usually use the Bollinger Bands for determining biases and overall direction on the higher time frames. Um, Basically, anywhere above this blue line right here just indicates oversold levels, and anywhere that um is below this line right here, it indicates lower over sorry, oversold levels is this line right here. Overbought levels is this line right here. This is the moving average right here on the Bollinger Band. So whenever you see a downtrend in a market in the higher time frames, and you see that the candlesticks are respecting that line right here, it just means that it's in a bearish trend. So when I saw this, I was looking for some respect on the average right here, the basis. And so when I went into the 5 minute to go look at it, um, I marked out my London session liquidity zones, and I basically looked for just where market would be heading. Since I was looking for shorts, I was waiting for the first candle right here. Um, I was waiting for it to end because that's market manipulation. As you can see, it went above the overbought levels, which indicates possible um, draw to downside. Then I saw this candle right here, and what I mainly look at before entering is this indicator right here. This is the momentum indicator. These are my settings for it. Its length is 10, source close. Um, Whenever I see this just go aggressively down, when volume is very high, right, that is a good indication. It tells me that whatever direction it's gonna go to, the volume is very high and it will go there aggressively. So when I saw that and I saw the reversal of the two lines right here go to the downside, that was my indication that this market is gonna drop down. So I set my trade right here. I did 6% stop loss and 19% profit gain. And I'm pretty sure I won this trade. Did I win this trade? Um, yeah, I did. I won that trade. So, so it was the third, right? Yeah. So basically, think of it as like a river, right? You're just gonna be following the market wherever it goes. Just follow it, enter the trade, and remember always, there's the market always gonna have a direction that it's gonna go, right? All you need to do is be patient and wait until your intuition tells you that the market is gonna go that way. So, like I told you here, this was the manipulation, right? A lot of people could have entered long right here and would have got stopped out. So always think of like, what is the worst possible, what is the worst position to enter, either long or short, on this first candle when it ends. So if I entered this candle at a short as a long position, I would have got stopped out. So what am I gonna do? I'm gonna look for a short position, also along with the 4 hour, the far, where's the along with the 4 hour. You're looking for that respect on the average right here, right? So when you wait for that respect, you wait for manipulation, right? So that's the first thing, right? So the first thing you look for, right? So the first thing you look for is one, set a goal or bias, right? A daily bias, right? By looking at the 4 hour chart, using your average indicators, using your Bollinger Bands. Look for the average. Look for what you think the market might go to. That way, you're just not reacting based off just only feeling, right? You have a goal. And number two is wait for manipulation to expose itself, right? So, for an example, this right here is the manipulation because it's faking out, right? Remember, what goes up must can come down, most likely will come down, and what goes down can also come up, right? So just think about that. So wait for manipulation to expose itself. Like I said, I wait for the first 5 minute candle to end before I look for an entry. Wherever market its direction is going based off that, based off after the first candle, that is where I'm going to be looking for the entry. So for an example here, it ended right, and I said if I would have went long, I would have went to the stop loss. So I waited for this candle, and I saw it was going down. I saw my momentum dropping right here. You see how it was dropping right here? This reversal right here on the MACD lines, that is your indication. Enter the trade. I entered the trade, and I won it. Again, this is my MACD settings right here. 613 and 5. Now that's one of the trades, right? So always wait for manipulation to expose itself, which is which is usually itself by waiting for the 5 minute 9:30 candle to close. So you wait for the 5 minute 9:30 candle to close. Then at 9, you wait for the exposure of the direction of this candle at 9:35. So for the continuation or signs of a reversal, right? So at 9:35, you wait for the continuation or signs of a reversal, right? So when this candle closed right here, this is the manipulation, right? And then at 9:35, you wait for the continuation or signs of a reversal. There's many signs of reversal. Um, a reversal can be, for example, here it was going short, and then all of a sudden it's starting to go up, green. You look at the MACD lines. Let's say it was the opposite of this, and the MACD lines and the signal line were crossing each other, but at down here as a reversal to the upside, and the momentum was rising. That is a key confluence for a long position, right? For a reversal. But here it was a continuation. For also liquidity zones. Look at how price reacts to liquidity. One of my trades I hit last week, I saw it respect a liquidity zone that I had, um, and that's what won me the trade that day. So look for the continuation. Based on the market direction. Um, so then base on step 3 is either you're gonna short or you're gonna long, right? When you look for a respect, right, you can tell when the market is kind of like something's holding it back from going to that direction. It's something's holding it back, because usually it will just drop like this, or you can see that it just goes up, down, and down and down. But then you see a little bit of a respect, and that's when you can tell maybe I should go long for this. So now let's look at another market. Let's look for the next day after this. All right, now here again. As you can see here, you set a goal for the bias, right? You go to the 4 hour, right? And you can see here, right? To be honest, if I were looking at this, I would probably set maybe a short, maybe a long. It just depends how you're feeling that day. Just because you set a goal or bias doesn't mean you're completely loyal to it. Um, but it just means that you're not coming into the market empty-handed in a way, or unprepared, right? You just have a clue. Maybe market will move this way today, and this is some evidence, right? It's not really proof. It's not really confirmed, but this is evidence that the market might move this way, right? So you might go short. Now I did mark out this right here during London session, or no, I'm sorry. This is um this is Asia session, pretty sure. And this is a liquidity zone. So with things like this, when you see price go directly to this zone, which you look for, right? Because remember, you set a goal and you wait for manipulation to expose itself. So you do not enter on this candle right here on the 930 candle. You wait until it's finished. That's usually the manipulation, and you wait how the rest of the candles after that react. Um, so it went straight to my liquidity zone right here, right? And then I saw kind of a holdback, like I said, a respect. So market just didn't directly follow that direction. It kind of just stood there and it didn't keep going down. It just started going up little by little. And that is key indication that maybe I should be looking for a reversal to the upside. So that's when you look at the MACD, right? And the MACD is we're gonna tell you when a reversal is occurring. And also you can see here on the momentum indicators that the market didn't follow the direction of going down. So we're not looking for shorts anymore. Even though our bias look going into the market could have been shorts, it could have we could have just guessed that maybe today was going to go shorts, but now market has presented itself, manipulation is over, and we can clearly see that market is more likely to go to the opposite direction of this liquidity zone, respecting it, a sweep right here. So when we see that, when we see this momentum indicator right here, right? When you see it reversing, when you see it going the direction opposite of this first candle, that's when you start looking for a reversal. So then you use these lines right here as a clue. Once this crosses right here, that is your indication to enter the trade. I entered the trade with 20% take profit and a 5% stop loss, and I won the trade. So now you wait for the 935 and you wait for continuations or signs of reversal. And the sign of the reversal was hitting the liquidity and respecting it by looking at these momentum trades, by it going down this candle right here in the 930, and then it started to rise up, and that is indication that it is not going to continue, and to start looking for a reversal. It also went, and it also went right here. The MACD lines did cross each other to the upside, so that is your indication that it is going up. That was that day. Um, what else? We're gonna go to the next day. Okay. So right here, kind of the same thing. This is the 5th of November. Go to the 4 hour, the 5th. So as you can see here, we see price is kind of respecting these levels right here. So what you can tell is, and we can see that the histogram bars are weakening and getting lighter in their color. And that is kind of some signs that there could be a reversal upside. Not fully to the long overall position trend, but it could rise all the way back to its average right here and respect it again and move back down like it did right here. So this is signs that market is respecting the oversold levels, and that there's evidence that it might have a bias of a long during your session. So that's why I went into the market. So Remember, you set a goal. We just set a goal on the 4 hour. We set a goal and we said maybe market's gonna be moving to the upside, right? Now, what you do is you wait for the manipulation to expose itself. What do you see? Market went down, and what did I say earlier? What goes down may go up, most likely. That's high probability right there. When market goes up, it goes right. There's always retracements in markets. What goes up always comes down, and what comes down always goes up. There's always retracements. Um, so we set the goal for longs, right? We wait for manipulation to expose itself on the 5 minute 9:30 candle, and we wait for it to close. It closed, right? But what do we see on the next candle right here? We see a rise up right here. You can see how market really just went down here and then it rose up like that right here. So what is that signs of? There might be not a there might not be a continuation after this 9:30 candle. So there might be not a continuation of bearish price action. So what does that tell us? That tells us maybe we should look for a long. Our setting goal is also longs. So that gives us more confidence that today might be longs. So what do? We wait for the histogram bars to weaken again, and we wait for the lines to meet each other. And when they meet each other, that is signs that there is reversal occurring, and that's what we did. We entered right on the reversal right here, and the momentum's rising, and then we just followed the market. So the whole point of the strategy is just waiting. It's just waiting, being patient, waiting for market to manipulate the first 5 minutes, first 5-10 minutes, right? It's usually the 5 minutes, right? The first 5 minutes, but sometimes it can last the first 10 minutes. So we wait here and we wait for that reversal. Reversal happened and we entered. At 9:35, you wait for the continuation or signs of a reversal. That was the signs of reversal where momentum didn't just continue down. It rose back up. So that is your indications. Your indicators are very, very important because it's telling you what is happening in that moment. It's not part of the strategy, right? The strategy is just waiting for the manipulation and then following the direction after the manipulation, right? But it tells us what is happening at that time. If we just rely on price action itself, it can be more difficult. It's not impossible. Some people just only rely on the price action and not indicators, which is fine. If it works for you, it works for you. But using indicators is just helping us a lot more because now we can see these lines meet right here, right? And that's just signs of reversal, and it just worked. The momentum is telling us the momentum of the price action, right? If price is going up on the momentum indicators, right? What are we gonna assume that the price is just gonna continue to rise up, right? It's not always gonna be 100% true, right? Just because it's rising doesn't mean that the price won't reverse 10 minutes later, but it's telling us what is happening at that moment, right? The whole point of the strategy is just following the market, right? We're not predicting anything, but we're just following where price is just taking us. Think of it as like a river. You see this price action just moving up, moving up, moving up, right? And we see this sweet reversal right here. And we're just gonna follow that reversal just so we can make some money, right? And never be greedy, right? We were looking for, you know, the same risk always, 20% take profit, and I set my stop loss to break even at this point, but it was at a 7% um stop loss. So that's what you need to focus on, right? Use these indicators to tell you, right? There's always gonna be manipulation, right? You wait for the manipulation to end, and that's when you can tell where market's gonna close, right? So that's the thing, right? Market will almost always manipulate the first 5 minutes after market open, right? And what we're looking for is what direction market takes after the manipulation, right? So market will always manipulate the first 5 minutes after market open, right? Once that candle closes, we're looking for the direction that it takes after the manipulation, right? Manipulation is just a fake out, right? It's gonna take you down just so people can short, and then it'll take you back up, right? So manipulation is just the first candle. What goes down must come up in the markets. What comes up must come down in the markets, right? Now after 9:30 candle, the 5 minute candle, it will always tell you what the next 30 minutes is gonna look like, right? So we're only focusing from 9:30 to 10, right? So what I'm telling you is this strategy. This strategy, right? Just look at it from this perspective right here, right? This strategy right here. If you need to do this, it's fine, right? Mark out, put a vertical line at 9:30, right? And mark it open to 10, right? And just focus. Focus on only this. What do you see here? Right, I'll just zoom in a little bit. What do you see here? You see a down and then up, right? That's just how it works. What is the manipulation? The down part. And what is the direction of the overall first 30 minutes? Up. So all you're waiting for is to wait after the manipulation exposes itself. When your indicators tell you it's a reversal, that's when you enter. When your indicators tell you that it's a continuation, then you just keep going with it, right? It's like a river. Just follow the river. Don't go against the current. Go with the currents, right? Don't go against the river. Go with the river. That's the whole point. That's how you make money with this strategy. You just follow the market, right? But you wait for that manipulation to end. So manipulation is always at that first 5 minutes, the 9:30 candle. Always stay on the 5 minute chart. Once that first candle is done, then you wait for the reversal or the continuation, right? And use your momentum indicators to tell you this, right? And here's here's the settings for it right here. So now we can look at another um just like here, right? So it's just like here. Now you go, it's the 6th of November, right? 6th of November. You can see this right here. So since this is a downtrend, what you're expecting is that it's gonna respect the basis, right, of the Bollinger Band, and it's gonna continue to the downside. So when market open, you're assuming it might be short. That's your goal, right? You set a goal right there, and that's what happened. You set your liquidity sweep, your liquidity zones right here. So you set the goal already, right? And you wait for manipulation to expose itself right here. Manipulation expose itself. Now then you wait for price to after this, right, at 9:35. But realistically, I think I did lose this day. I did lose. Realistically, when you're at this right here, right, and you're waiting and you see that respect on this liquidity zone, my mind at the time was thinking maybe this would be a reversal. So I was thinking, and also the momentum charts weren't completely down. They weren't very bearish, right? They were overall bearish, but they weren't aggressively bearish, right? So I was looking for a reversal. I think I entered like around here on a long, and I think I got stopped out right here. Yeah, but that could have. I think that was my fault because as you can see here, the lines never crossed, and that is my indication that there's a reversal. And I think I just entered too early, and yeah, I think that was just my fault. I just didn't do the right thing, and it just kind of just messed me up. It made me lose some money, but I didn't lose too much. It was only $300, and every trade I win, I make 1,000. So the management in that way, it doesn't really affect me. Losses don't really affect me because I win big, but I lose little. So, but if I would have did the right thing and never have entered, I could have probably entered right here or right here. It just depends. But I was meant to lose that day, and that's what happened. So the next day, we're gonna look at the next day. All right. So as you can see here, manipulation was the first candle, right? This isn't really manipulation, but because it was a continuation, but I just call it manipulation because I don't enter um the first candle. So manipulation was here, we'll just call it that. And then we just saw a continuation. As you can see here, right here, volume is rising up, right? And as you can see here, the momentum is just aggressively bearish. So when you see that, right, and when you see this, right, no signs of market cutting in and reversing back up. No signs, and aggressively momentum is just aggressively pulling down. That's when you have to follow it. You follow it, you entered on that trade, right? I was not my stop loss was not 39%. It was like an 8. So when you see that, that's when you need to enter. And I entered and made money, right? So first thing, set a goal and a bias, right? So this was the 7th. All right, the 7th right here. So as you can see, market, this momentum is just drawing down. The oversold levels was just dropping. You can just tell that the market was just gonna keep going down. Go to the 5 minute, the 7th, right? You wait for manipulation to expose itself, right? Do not enter the first candle, the first 5 minute candle. You wait for the second candle, right? You wait for signs of a reversal or signs of a continuation, and the continuation was just following through. As you can see here, the market just kept going down and down, so you just follow it, and that's you make money. So remember, do not enter at 9:30. Do not enter from 9 the first 5 minutes of the market open. Never, never, because it's usually the first candle, first 5 minutes is just moving up and down. It's just moving up and down, and then it just relaxes after that, right? And then that's when it closes. So you can think of it as like this, where let's see, how can I? You can think of it as like this. Look, market just moves up and down first 5 minutes, right? This is how it's just moving, right? Large, up and down, first 5 minutes, right? First 5 minutes is just moving up and down, just like this. And then after, and then after 9:30, and then at the second candle right here at 9:35, the market just moves, right? Let's say that, right? So the three candles right here, right? This symbolizes the first 5 minutes. For these five candles right here symbolizes these candles right here. This candle right here. So then when markets just finish manipulating, right? It's just moving up and down. What happens is that market just slowly just moves slowly down. It just moves slowly down. It just moves slowly down because that's the direction that it's taking. And it just moves down and down, right? And that's when you enter on that short right here. So that's how it works right here, right? These five candles, these blue candles right here, right, symbolizes this first candle, right? It's moving up and down, 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 right? And because it's so aggressive, right? And the market just opened. Everybody's just buying, buying, selling, selling, buying, selling, buying, selling. So it's very aggressive. After that, the market just kind of just slows down. It just exposes its direction for the next 30 minutes, right? So from 9:30 to 10, that's what it's exposing, right? It's just going down, 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 right? So the blue, so the blue right here, the blue symbolizes, right, first 5 minutes of market open, all right? And then the black symbolizes the overall direction of the market after the first 5 minutes of market open. So does that make sense? Right? The blue symbolizes the first 5 minutes. Very volatile, right? Fake outs, boom, 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 right? Market is open. Everyone's just buying and selling and contributing to the market. And then once after that, the first 5 minutes, that's when price will and the market will just expose its overall direction. So then the black arrows just symbolizes the rest of that 30 minutes. It'll move that direction. Does that make sense? Right? Same thing, right? Same thing with the other side, right? Let's say this was in a short and this was a long. These arrows will be going up slowly by slowly. And let's say this was a bullish candle right here and it was a continuation and it just kept going up, right? So the first 5 minutes, never enter. Wait for it to finish and you look for a signs of continuation, signs of reversal, and that's when you just start flowing with it. You just follow it. Follow the market like a river. So you wait for manipulation to expose itself for the first 5 minutes, right? So you wait for the 5 minutes to close, right? Then at 9:35, you wait for the continuations or signs of reversal. Here it was continuation. As you can see, momentum just dropped, right? No signs of reversal down here. Volume high. So you just follow it. If you want to, you can take some pictures or of this right here. This is very important. I feel like I did. That's a good example, right? Take that short right here. Remember, these blue candles symbolize the first 5 minutes. So which is this candle? Because it's very volatile. Big candles, big strides. The rest of the market is just slowly going down. And that's what you take. You take after the 5 minutes. So then here's the same thing. Here's the same thing. Let me take this over here. here's the same thing, right? Market opens, right? You set a goal. So let's go to the 4 hour. You always go to the 4 hour, right? Go to the 4 hour and you look for overall market direction, right? So when you look at this, you see this momentum just rising and rising and rising, and it already passed the average. So what you're looking at is maybe it's reversing back to the upside. And it's gonna go back to all time highs, maybe. So when you see that, what you do is you aim for longs. That's your goal. Your goal is the longs, right? Doesn't mean we're completely loyal to the longs, right? But we're saying that, so that we're not empty-handed coming into the market with no goal and no nothing. At least we have an idea. Maybe market will go in this direction. So you set the goal. We just did, right? Longs. You wait for the manipulation to expose itself, which is the first 5 minute candles, right? The first 5 minute candle, which is at 9:30, and you wait for itself to expose itself, and then at 9:35, which is right here, you wait, and what you look for is either continuation or signs of reversal. Signs of reversal is reversals on liquidity sweeps, the directions or respects of liquidity sweep of liquidity zones that you've marked out from pre-sessions. Um, and then signs of reversals is just overall the weakening of the histograms and the sweep of the MACD line, right? It'll start curving like that, and it'll go um, across the Y line, which is the signal line. So we didn't see that. We saw the lines just keep going up, bullish along with the momentum rising, and we took the long. We took the long because we're following the market, and the market is telling us that we are going up, right? So at 9:35, you look for signs of reversal, signs of manipulation. But obviously, look, I'm teaching you guys this strategy, right? But you're not gonna completely get it until you put it into practice and you really just apply it to your trading, and eventually you will get it right. It's a lot of it is a lot of intuition. The more you trade, the more experience you get. All right, I'm not saying overtrade, but what I'm saying is like overall, just like months of just learning how to do this, months of experience will give you that intuition, right? Studying, forward testing, back testing, this market will just teach you how this market works sometimes. Sometimes I'll look at the market and I'll just think, market's gonna move this way just because I've seen it so many times. I'm kind of used to it. So that's just how it works sometimes, you know. So again, the rules is set a goal, bias, right? We're not 100% loyal to it, but we just have an idea, right? You wait for manipulation to expose itself by waiting for the 5 minute 9:30 candle to close, right? So you wait for this candle to close, then based on whatever this happens, right? Whatever happens in this candle and the indicators, it'll tell you whether price is just gonna keep flowing up or keep flowing down, or reversing up or reversing down, right? It's going to tell you reversals. You need to look at the momentum and the MACD. But overall, for continuations, you just got to look at the manipulation. I mean, that's the momentum. And a little bit, sometimes you can look at the MACD. But more importantly, is the momentum. Momentum is really going to set you where it is, right? Like a momentum trader. Momentum traders, they rely on the momentum of the market to take them to and to follow it, right? You follow the momentum. And then market will always manipulate the first 5 minutes, right? It won't manipulate, but it'll move very rapidly up and down, right? And just you don't want to be in that type of trade, right? So you wait for that first 5 minutes, right? And whatever it sets on, right here, it'll tell you whether it's gonna continue or it's gonna go reverse. So the whole point of the strategy is to follow. after the manipulation, right? You wait for that manipulation to end, and you wait on these first 30 minutes of the market. It's either going to continue up, it's going to go down. And you use your indicators to tell you where, right? You just follow the market. It's like a river, and you just follow it. Um, but yeah, that's I hit this trade today. Um, right here, I just saw the momentum indicators just keep going up, and I saw this keep going up after this candle right here, and I just entered it, and it worked out. But yeah, I mean, I think last week, yeah. So today I made 1,000 off it. 1,000 losses straight right here. 1,000. So remember to always make your losses small and make your wins big, so that your losses never really affect you. So I mean, that's about it. I hope that helped you all a lot. Um, Remember to always look at your indicators. All right, it's gonna tell you. These are my settings on the indicators right here. And so always look at the indicators. It's gonna tell you what price is doing in the moment, and that is very valuable as a momentum trader. Right, we're momentum traders. We're looking for the momentum of price, overall direction the first 30 minutes, and we're just following momentum after the manipulation, which is usually the first 5 minutes. So always remember that. Do not enter the first 5 minutes. It'll kill you, right? Always wait for the first 5 minutes and then look for the sign and on these candles on either continuation or reversals. Based off that, you take your decision on what you're gonna take by following the market's direction after the manipulation. So again, this is the rules right here. These are the rules right here. And then we need to look at this. So remember, first 5 minutes are these candles right here. This moves big, large, um, manipulates, and then after the 5 minutes, the market will expose its direction, right? Like here, the first 5 minutes of market open is blue, the overall direction of the market, and that's how it works. It's all about momentum and basically ignoring the manipulation. Do not. It's almost like they're trying to deceive you and basically make you, because that's what happens in market open. People are buying, people are selling, and that makes the market way more volatile in those moments. Yeah, I mean, I hope this helps, and I hope this helps. This video, I try to explain it in the most simple way I can. Obviously, it's not gonna work for everybody, but I do hope that it can work, right? It's all about following the momentum and the direction of the trade and the market, and just I would try my best to explain it in the most simple way possible. For me, if anybody needs help understanding like how these indicators work, exactly, there's always videos on YouTube about them, how they work, the way they work, and like how to read them. This is the Bollinger Bands right here indicator. This is the MACD indicator, and then this is the momentum indicator. and these are my volume indicator right here. So um, I mean, I hope it helps. Um, a lot of people will be asking me to for help, and I feel like I haven't really made a video of really explaining it in simple terms and where beginners can also understand. Um, but yeah, I hope you all understand it, and yeah, just like the video if you can. I'm gonna start posting more. I know I always say that, but I end up not even posting. But I'm gonna try to stay consistent with it. And yeah, I'll see y'all later.